The Reserve Bank's final Monetary Policy Board meeting of the year began today, ahead of tomorrow's cash rate decision. Inflation is clearly going in the wrong direction, and that's going to be a concern for Governor Bullock and her team at the RBA. So let's bring in here independent economist Warren Hogan. Warren, good to see you. Treasurer Jim Chalmers today announced he was scrapping the federal government's energy rebate. So what's this going to do to inflation in the year ahead? Because I know it was a big reason why inflation was lower.
Yeah, good afternoon, Ed. Look, we had expected this energy rebate to go in the sense that its life was due to end, and that's what the RBA forecast would have factored in, and most economists. So it doesn't change much in terms of our expectations, but of course, it was always a bit of uncertainty, and this highlights, of course, that there will be some further upward pressure from this source on inflation. The good news, though, is that it's not more money being put into people's pockets. And of course, that's the big issue right now in terms of the momentum in the economy is strong. And part of that's people out there spending and putting upward pressure on inflation.
Federal government's MYEFO or mid-year budget update. It's going to be released at some point next week, probably on Wednesday. I mean, does government expenditure need to be drastically reduced here to kind of help repair the balance sheet?
Yeah, well, there is this issue about our fiscal position, whether it's the fact that we've got deficits forecast for decades ahead or the fact that our debt continues to grow. But I think the priority for the government and the treasurer is actually demonstrating to the RBA board that they are showing restraint, because the RBA board right now are meeting and talking about a radical shift in the flow of economic data in this country in the last 2 months, to the extent where a month ago the market was expecting a rate cut next year. It's now expecting a rate hike. And that is because we've seen a big increase in inflation. And of course, we're seeing ongoing strength in the economic statistics. So if the treasurer can demonstrate restraint, then he could put forward the argument that the government will be pulling back on the economy as the private sector is pushing it up. So I think that's the priority. And that also explains why the energy rebate was the extension was announced today, or the lack of extension was announced today, so that the RBA board would have that information before making any comments tomorrow.
Yeah, we just had the market pricing on the screen showing just a 0.2% chance of a hike tomorrow, but an 80% chance of a rate increase by the end of next year. I mean, do you think the RBA Monetary Policy Board today and tomorrow are going to be discussing rate hikes?
Well, I hope so, because the situation we find ourselves in right now is that the RBA's views, their forecasts, and their policy strategy does not seem to be working. You only have to go back to their forecasts from a month ago for consumption, and it looks like it's going to be wrong for the December quarter. That is the quarter we're in now, by almost a percentage point. They had 2.1. It could easily come in at 3% annual growth. Inflation is going to come in probably around 4. You go back 6 months and they thought it would be under 3. So they have got a problem. They've underestimated the inflation and they've underestimated the strength of the economy. And that means our interest rate's not at the right level. It's too low. And so they need to seriously think about how they're going to fix this problem. Waiting is obviously part of their strategy. They'll wait through the summer, but they will be discussing what the strategy is around communicating the fact that they may need to lift rates early next year.
The other curveball for the RBA is the unemployment numbers. They're coming out later this week. The rate is pretty low at the moment at 4.3%. I mean, do you think it is going to start rising in the coming months, unemployment?
Look, that's one risk. We did see a surprise jump in unemployment a few months ago. It was reversed with the last reading. And of course, if unemployment goes up above their forecast of 4.4%, and it's currently at 4.3, then that will add to the case for them to be cautious. But the reality is that they have both an unemployment mandate or target, keeping that as low as possible, and they have an inflation target. They have been hitting their unemployment target the whole time, but they have never hit their inflation target. And we are 4 years into this. So they need to prioritize what they're going to target, and that needs to be inflation. So I'm not sure, in the absence of a big increase in unemployment up towards 5%, that it's really going to change this issue that they have got an inflation problem they still have to deal with.
Independent economist Warren Hogan, thanks for coming on the show.
Thanks, Ed.